Based on the historical data and forecast, Bitcoin has shown a generally upward trend, albeit with some volatility. The price has been fluctuating between a support level of $115,100 and a resistance level of $116,700. The RSI indicator has been oscillating around the 50 level, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening slightly, suggesting increasing volatility. Considering this, I propose a strategy focused on capitalizing on short-term pullbacks while respecting the overall upward trend. Specifically, I recommend a long position entry at $115,800, coinciding with the first forecast price and a slight dip from the recent high. A stop loss should be placed at $115,100, just below the established support level, to limit potential losses. The initial target price is set at $116,900, aligning with the forecast price for September 24, 2025. If the price reaches this target, consider taking partial profits and moving the stop loss to the entry price to protect gains. This strategy combines RSI, Bollinger Bands, and support/resistance levels to maximize potential returns while managing risk. Based on the historical data and forecast, Ethereum demonstrates a volatile trend with a recent upward momentum. The RSI fluctuates between 49.9 and 64.0, indicating periods of both neutral and overbought conditions. The Bollinger Bands show expansion and contraction, suggesting increasing price volatility. Considering the support price of $4,270 and the recent price action, I recommend a long position strategy. We will enter a long position at $4,590, coinciding with the closing price on September 17 and the initial forecast price for September 18. The stop loss will be set at $4,500, just below the recent low, to limit potential losses. The initial target price will be $4,750, aligning with the forecast for September 24. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI drops below 30, indicating an oversold condition, we will consider adding to the position at $4,300, with a stop loss at $4,250 and a target price of $4,500. Conversely, if the price touches the upper Bollinger Band, indicating an overbought condition, we will consider taking partial profits at $4,700. This layered approach, combining trend analysis with technical indicators, aims to maximize returns while managing risk. The overall portfolio will prioritize the long position at $4,590 with the initial stop loss and target price, supplemented by opportunistic additions and profit-taking based on RSI and Bollinger Band signals. Based on the historical data and forecast, XRP shows a generally upward trend, supported by the consistently high RSI values above 40 and the Bollinger Bands indicating volatility within an upward channel. The price has been fluctuating around the $3.04 support level, with resistance at $3.27. Considering the RSI, an oversold level of 20 and an overbought level of 80, we can identify potential entry and exit points. The forecast for the next week suggests a continued upward movement, with prices ranging from $3.06 to $3.14. Therefore, I recommend a long position strategy. We will enter a long position at $3.06, placing a stop-loss order at $3.04 to mitigate potential downside risk. The initial target price will be $3.14, aligning with the forecast high. If the price reaches $3.14, we will move the stop-loss to the entry price of $3.06 to secure profits and protect against a reversal. We can consider a secondary target price of $3.27, the resistance level, for further gains. This strategy combines trend analysis, RSI signals, and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, BNB demonstrates a clear uptrend. The price has been consistently rising, breaking through resistance levels and showing strong momentum. The RSI values, while fluctuating, have generally remained above 50, indicating bullish sentiment. The Bollinger Bands have been expanding, suggesting increased volatility and potentially higher returns. Considering these factors, I recommend a long position strategy. We will enter a long position at $974, placing a stop-loss order at $956 to mitigate potential losses. Our initial target price will be $1,000, aiming to capitalize on the predicted upward movement. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 20, indicating an oversold condition, we'll consider accumulating more positions at $1,000, with a stop-loss at $987. Conversely, if the RSI reaches 80 or higher, signaling an overbought condition, we'll partially take profits at $1,020 and adjust our stop-loss to break even. We will then aim for a final target price of $1,060, capitalizing on the sustained uptrend. This layered approach combines trend following with momentum indicators to optimize risk-reward ratios and maximize potential returns. Based on the historical data and forecast, Solana exhibits a strong uptrend. The price has consistently broken through resistance levels, and the forecast indicates further upward momentum, reaching $263. The RSI consistently trending above 50, nearing overbought levels, suggests strong buying pressure. The Bollinger Bands are widening, indicating increased volatility and potential for further price movement. Given this analysis, I recommend a long position strategy. Entry price will be $244, with a stop-loss set at $240, just below the support level, to mitigate downside risk. The initial target price will be $257, aligning with the recent resistance level. To refine the strategy, we will incorporate RSI and Bollinger Band signals. If the RSI dips below 40, consider a partial entry at $244, with a stop-loss at $240, and a target price of $250. If the price touches the lower Bollinger Band, consider a long position at $244, with a stop-loss at $240, and a target price of $257. If the price breaks above the upper Bollinger Band, consider a long position at $244, with a stop-loss at $242, and a target price of $263. This layered approach maximizes potential returns while managing risk effectively. Based on the historical data and forecast, Dogecoin exhibits an overall upward trend, confirmed by the increasing close prices and the breach of the resistance level of $0.289. The RSI consistently moved above 50, indicating bullish momentum. The forecast for the next week projects continued upward movement. Therefore, I recommend a long-term position with an entry price of $0.273. Place a stop-loss order at $0.268, just below the recent low, to mitigate potential losses. A reasonable target price would be $0.286, aligning with the forecast high and offering a healthy profit margin. To refine this strategy, let's incorporate the Bollinger Bands and RSI. When the price touches the lower band and RSI is below 30, consider a long entry at $0.273. Place a stop-loss at $0.268. If the price reaches the upper band and RSI is above 70, take profit at $0.286. This combined strategy leverages both indicators to enhance risk management and maximize potential returns. The portfolio is weighted 60% on the forecast price, 30% on the RSI, and 10% on the Bollinger Bands. Based on the historical data and forecast, Cardano shows an overall upward trend, although with some volatility. The RSI consistently fluctuating around the 50 mark suggests neither strong overbought nor oversold conditions currently. The Bollinger Bands indicate a recent narrowing, which could signal a potential breakout. Considering the support price of $0.862 and the resistance of $0.929, I recommend a long position with an entry price of $0.896. To mitigate risk, set a stop-loss order at $0.862, just below the established support level. For the target price, aim for $0.929, the recent resistance level, offering a reasonable profit margin. To refine this strategy, we'll incorporate RSI signals. If the price dips and the RSI falls below 20, consider a long entry at $0.89. However, given the current RSI around 50, this is less likely. If the price rises and the RSI exceeds 80, consider taking profits at $0.909. The Bollinger Bands suggest that if the price breaks above the upper band, $0.925, a strong upward movement is likely, justifying a target price of $0.935. This combined strategy prioritizes the upward trend while incorporating RSI and Bollinger Bands for more precise entry and exit points, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, TRON shows a sideways trend with consolidation around the 0.342 support and 0.352 resistance levels. The RSI fluctuates between 32.3 and 58.7, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. Considering the current RSI of 51.4, which is near the middle of the range, and the forecast prices hovering around 0.341 to 0.345, I recommend a moderately bullish strategy. My strategy involves a long position with an entry price of $0.343. The stop loss should be placed just below the support level at $0.341 to limit potential losses. The initial target price is set at the resistance level of $0.352, aiming for a quick profit. However, if the price breaks above the resistance, I will adjust the target price to $0.356, based on the upper Bollinger Band. The RSI strategy will be used to manage the position. If the RSI reaches 80, I will take partial profits and move the stop loss to break even. If the RSI falls below 20, I will close the entire position. This combined approach leverages both trend following and volatility indicators for optimal risk-reward management. Based on the historical data and forecast, Chainlink shows a generally upward trend, supported by consistently breaking through resistance levels and the forecast predicting continued price increases. The RSI consistently stays above 50, indicating bullish momentum, though nearing overbought territory. The Bollinger Bands are narrowing, suggesting a potential breakout. My strategy will focus on capitalizing on this upward momentum. I recommend a long position entry at $24.3 on September 18, 2025. A stop loss should be placed at $23.5, aligning with the established support level, to limit potential losses. A target price of $24.8, corresponding to the forecast price on September 24, 2025, provides a reasonable profit objective. To refine the strategy, I will incorporate RSI and Bollinger Band signals. If the RSI drops below 30, indicating an oversold condition, a long position entry at that price is recommended. Conversely, if the RSI exceeds 70, signaling an overbought condition, consider taking profits or reducing exposure. Additionally, a breakout above the upper Bollinger Band suggests a strong bullish signal, justifying an entry. A conservative approach would involve scaling into the position gradually, increasing exposure as the price moves favorably. The overall portfolio allocation should be 50% in this Chainlink strategy, 30% in a defensive asset like a stablecoin, and 20% in cash to maintain flexibility. Based on the historical data and forecast, Wrapped Beacon ETH demonstrates a clear upward trend. The price has consistently bounced off the support level of $4,600 and has tested the resistance level of $5,080. The RSI indicates that the asset is currently approaching overbought territory, but the forecast suggests continued upward momentum. The Bollinger Bands show that the price is currently near the upper band, indicating a potential for a pullback. Therefore, I recommend a strategy combining trend following and mean reversion. We will initiate a long position when the RSI dips below 50, aiming to capitalize on the upward trend. Specifically, let's target an entry price of $4,950. Given the proximity to the upper Bollinger Band, a conservative stop loss should be placed slightly below the lower band at $4,460. The initial target price will be set at the recent resistance level of $5,080. If the price breaks through $5,080, we will adjust the target price to $5,130, aligning with the forecast. This strategy balances the potential for high returns from the upward trend with risk mitigation through a well-defined stop loss, ensuring a favorable risk-reward ratio. This portfolio combines the most efficient elements of the three strategies, capitalizing on both trend and mean reversion. Based on the historical data and forecast, Curve DAO shows a downtrend with increasing bearish momentum. The RSI is consistently below 60, indicating a lack of strong bullish conviction. The forecast prices for the next week are also trending downwards, suggesting further price decline. Considering the support price of $0.744 and the downward trend, I recommend a short selling strategy. We will enter a short position at $0.757. A stop loss should be placed just above the recent high of $0.828, at $0.83 to limit potential losses. The initial target price will be the support level of $0.744. To refine the strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band, it suggests a potential oversold condition, which could offer a short-term bounce. However, given the overall downtrend, we will maintain the short position. If the price bounces and reaches the middle band around $0.722, we will consider adjusting the target price to $0.733. If the price breaks below $0.744, indicating a breach of the support level, we will move the stop loss to $0.73 to protect the capital. This combined strategy leverages both RSI and Bollinger Bands to optimize risk-reward ratio and adapt to short-term market fluctuations. Based on the historical data and forecast, Ether.fi exhibits a generally upward trend, supported by consistent price increases and a forecast predicting further gains. The RSI consistently fluctuates, but generally stays above 50, indicating bullish momentum. The Bollinger Bands have been widening, suggesting increased volatility and potential for significant price movements. Considering these factors, I recommend a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels. Specifically, we will implement a long position when the RSI dips below 30, indicating an oversold condition, and the price is near the support level of $1.47. The entry price for this trade will be $1.47. A stop-loss order will be placed just below the support level at $1.44 to mitigate potential losses. The initial target price will be set at the nearest resistance level of $1.67. To further refine the strategy, we will incorporate Bollinger Bands. If the price touches the lower band, it reinforces the oversold signal, triggering the entry. If the price breaks above the upper band, it signals a potential overbought condition and a possible exit point. For the forecast period, if the price reaches $1.66, we will take partial profits and move the stop loss to break even. The final target price will be $1.8, anticipating a continued upward trend. This combined approach aims to maximize returns while effectively managing risk by utilizing multiple technical indicators and support/resistance levels. Based on the historical data and forecast, Virtual's protocol demonstrates an overall upward trend, consistently testing and nearing the resistance level of $1.44. The RSI fluctuates, but generally remains within a range suggesting neither extreme overbought nor oversold conditions, except for brief periods. The Bollinger Bands indicate periods of volatility, with prices occasionally touching the upper and lower bands. Considering these factors, I recommend a long position strategy. Specifically, I suggest entering a long position at $1.27. A stop loss should be placed just below the recent support level at $1.31, to mitigate potential losses if the price reverses. The initial target price should be set at $1.34, aligning with the upper Bollinger Band and a reasonable profit margin. To refine the strategy, we can incorporate the RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, consider entering a long position. Conversely, if the RSI exceeds 70, suggesting an overbought state, consider taking profits or exiting the position. If the price touches the lower Bollinger Band, it might signal a buying opportunity, while touching the upper band could indicate a potential sell signal. Combining these signals, I recommend adjusting the target price to $1.37 if the RSI rises above 60 and the price remains above the center of the Bollinger Bands. This combined strategy offers a dynamic approach, adapting to short-term fluctuations while capitalizing on the overall upward trend. Based on the historical data and forecast, Lido DAO demonstrates an overall upward trend, supported by consistent price increases from September 4, 2025, to September 17, 2025. The forecast for the following week projects continued, albeit slightly more moderate, growth. Considering the RSI values fluctuating between 44 and 56, the asset is neither significantly overbought nor oversold, suggesting room for further appreciation. The Bollinger Bands indicate periods of volatility, with prices occasionally touching the upper and lower bands. My strategy is to implement a combined approach leveraging RSI and Bollinger Bands to maximize potential returns. My recommended strategy involves a long position with an entry price of $1.26 on September 18, 2025. The stop loss will be set at $1.18, just below the support level, to mitigate potential losses. The initial target price will be $1.29, aligning with the forecast high for September 18, 2025, and the upper Bollinger Band. If the price reaches $1.29, I will move the stop loss to the entry price of $1.26 to secure profits and protect against a potential reversal. A secondary target price will be $1.32, based on the recent resistance levels and the overall upward trend. This portfolio combines technical indicators and price action to generate high returns. Based on the historical data and forecast, Pudgy Penguins demonstrates a slight upward trend, with prices fluctuating between a support of $0.0331 and a resistance of $0.0365. The RSI indicates that the asset is currently in a neutral to slightly overbought territory, ranging between 40 and 60. The Bollinger Band suggests that the price is currently near the upper band, indicating a potential for a slight pullback. Considering these factors, I propose a moderate bullish strategy. We will enter a long position when the price dips to $0.0339, near the support level and the beginning of the forecast period. The stop loss will be set at $0.0331, just below the support to protect against a potential breakdown. The initial target price will be $0.0352, aligning with the forecast price at the end of the week. To refine the strategy, we will incorporate a trailing stop loss. Once the price reaches $0.0352, we will move the stop loss to $0.034. If the price continues to rise, we will adjust the stop loss accordingly, always maintaining a buffer of at least $0.01 from the current price. The final target price will be $0.0365, the resistance level. This approach allows us to capitalize on the upward trend while mitigating risk through strategic stop loss placements and leveraging the forecast data. The portfolio will be 60% based on the RSI strategy, 30% based on the Bollinger Band strategy, and 10% based on the support and resistance strategy. Based on the historical data and forecast, Avalanche shows a strong uptrend with consistent price increases. The RSI consistently moves above 50, indicating bullish momentum. The forecast prices for the next week predict further increases, reaching $33.5. Considering these factors, I recommend a long position strategy. We will enter a long position at $30.9. The initial stop loss will be placed at $29.3, just below the support level, to protect against potential downside risks. The target price will be $33.5, aligning with the forecast high for the week. To refine this strategy, we will incorporate the Bollinger Bands. When the price touches the bottom band, it indicates an oversold condition, which is a potential buying opportunity. Conversely, when the price touches the top band, it suggests an overbought condition, signaling a possible selling point. Given the current trend, we will prioritize the long position strategy. Therefore, the final portfolio will be 80% long position at $30.9 with a stop loss at $29.3 and a target price of $33.5, and 20% cash. This balanced approach aims to capitalize on the upward trend while mitigating potential risks. Based on the historical data and forecast, Immutable demonstrates an upward trend, particularly evident in the recent price surge from $0.499 to $0.747. The RSI values have consistently risen, with recent readings above 60, indicating strengthening momentum. The forecast for the next week projects continued price increases, reaching $0.769. Considering these factors, I propose a long position strategy. we will enter a long position at $0.679, placing a stop-loss order at $0.672, just below the established support level, to mitigate potential losses. The initial target price will be $0.745, aligning with the forecast high for the week. To refine this strategy, we'll incorporate Bollinger Bands. When the price touches the lower band, indicating an oversold condition, we will enter a long position at $0.418, placing a stop-loss order at $0.4 and setting a target price at $0.5. Conversely, when the price touches the upper band, indicating an overbought condition, we will exit the long position. Combining these three strategies, the most efficient portfolio will be a long position with an entry price of $0.679, a stop-loss of $0.672, and a target price of $0.745. Based on the historical data and forecast, Jito shows a slight upward trend with volatility. The RSI fluctuates between 45 and 59, indicating periods of both oversold and overbought conditions. The Bollinger Bands suggest periods of increased volatility. Combining these factors, I propose a strategy focused on capitalizing on short-term price swings while respecting key support and resistance levels. We will implement a combined RSI and Bollinger Bands strategy, prioritizing entries when the RSI reaches the oversold level of 20 and the price touches the lower Bollinger Band. Specifically, on September 18, 2025, the forecast price is $1.91, and the RSI is expected to be below 50, which is a good opportunity to enter a long position. The entry price will be $1.91. The stop-loss will be set just below the support level at $1.88 to protect against potential downside. The initial target price will be $1.97, near the resistance level. If the price reaches $1.97, we will move the stop-loss to break even to secure profits. Further, if the price continues to rise, we will set a second target price at $2.04. This strategy aims to capture short-term gains by leveraging the RSI and Bollinger Band signals, while carefully managing risk with defined stop-loss and target levels. Based on the historical data and forecast, Wormhole shows an uptrend from September 4, 2025, to September 17, 2025, with recent fluctuations. The RSI indicates that the asset is approaching overbought conditions, hovering around 65.2. The Bollinger Bands are widening, suggesting increased volatility, with the price testing the upper band. The forecast for the next week indicates a slight decrease, but overall maintains a positive trend. Therefore, I recommend a strategy combining RSI and Bollinger Bands. We will initiate a long position at $0.093, placing a stop-loss at $0.0961, just above the support level. The initial target price will be $0.0998, aligning with the forecast high for the week. To refine the strategy, we will implement a trailing stop-loss based on the lower Bollinger Band. If the price rises to $0.101, we will move the stop-loss to $0.098. If the price falls below $0.0961, we exit the position. The target price will be adjusted based on the RSI. If the RSI reaches 80, we will take partial profits at $0.0956. This approach balances potential gains with risk management, capitalizing on the upward trend while mitigating losses from unexpected downturns. The final target price is $0.101. Based on the historical data and forecast, Eigenlayer shows a clear upward trend, supported by consistently breaking through previous resistance levels. The RSI consistently fluctuates, but generally remains above 50, indicating a bullish momentum. The Bollinger Bands have been expanding, suggesting increased volatility and potential for further price movement. Considering these factors, I propose a combined strategy utilizing RSI and Bollinger Bands. First, we will initiate a long position when the RSI dips below 30, indicating an oversold condition. For example, if the RSI falls to 28, we enter at $1.61. The stop-loss will be placed just below the bottom of the Bollinger Band, say $1.55, to mitigate potential losses. The target price will be set at $1.85, aligning with the previous resistance level and allowing for a significant profit margin. To refine this strategy, we will incorporate the forecast data. If the forecast price on September 18, 2025, is $1.61 and the RSI is below 30, we enter the long position at $1.61. Our stop loss remains at $1.55. If the price reaches $1.7 on September 20, 2025, as forecasted, we will adjust our target price to $1.85. This combined approach leverages both technical indicators and future projections to maximize potential returns while managing risk effectively. The portfolio will prioritize the long position strategy with an initial investment of 60%, followed by a secondary investment of 30% in a conservative strategy that focuses on support and resistance levels, and a final 10% in a high-risk, high-reward strategy targeting significant price movements.